Hello, Face. How's everyone doing today? Zig, William, Tom, Tony, Umar, how are you? Everyone doing okay? Hi, Spencer, Stavros, Scott Pickering. Face is a place where pros come to do some intelligence gathering. Who else is here that I recognize? Joe Kang, how are you? Jason Wright, Forex Gal, always here. David Ogles. All right, everyone. Good morning to everyone. Good afternoon, depending upon where you are on the globe. This may have been it for a pullback in euro, right back to what was resistance last week. And this pop in the dollar index as well, back to 97.05. I think 97.20 or 30 was the off number for this week. I'm looking for a continuation move down in the dollar. So, as I've been saying for a while, looking for this dollar to break down. It held the moving average a daily on Friday, and we bounced off it. This time I don't think we will, and I think eventually headed towards this 200-day moving average around the 96 level. Good, Scott. So that's what's happening there. S&Ps are smoking again. We could try Peter's number. If you remember the interview from last week with Peter Goodburn, I think he had 29.25 as a number. So far, crude is dogging it. I want to see where crude is at. Should the S&Ps, which are only about 9 handles away, see if we could get this stop hunt over with while the S&Ps blow off to that level. Looking at the yen off a little bit today, but to me this isn't normal topping action. I was looking at yields, and I've talked about it before that the yields have one more wave in my view, and they're up today. So this too, it kind of looks like the yen, doesn't it? Sideways, breaking out to new highs. Think we could get into the 260 range, maybe 265-ish. And I think that's going to be the time if you want to short the yen to do it, because as long as yields are heading up, they don't always move together the same day, tick by tick, but I don't like to be short US dollar yen while yields are rising, and I still think there's more to the upside. Hi, Craig. Yes, thanks for calling me coach. I'm a player coach. Yesterday I talked about a scalp in Aussie Kiwi, a scalp only. We did come off. I guess the RBA minutes weren't so fantastic, but we're on our way back up. Should blow through this double top now. Steve showed a nice area right up around 106.5. We'll see if we get there. I want to make a case for subscribing. Blake, Grega, Stelios, Steve, Dale, Joe, Paulie, European crossover dedicated guy, Amanda. Everyone loves Amanda. You know how many times I hear about Amanda outside of ForexAnalytix? Quite a bit. And, she hasn't been around, had some personal things to deal with, and, everyone misses her. I think she's one of the best. Andre, with his artwork and great harmonic calls. I rest my case. Where are you going to find a team like this on the net? Anywhere? Please let me know if you could find something comparable. There may be. I think it's pretty tough to top this kind of trading talent that remains humble. And no one in here claims to be a trading messiah. Even the best of the best. We're transparent. We say when we're wrong. We say when we don't know. And, compared to the revisionists out there that forget about the trades that didn't work out, they're all here for you to see. The good, the bad, the ugly. So at the minimum, check a trial out. So you could go through the active patterns in play. Okay, Greg is doing pretty well here on US dollar yen, Blake on Aussie yen. This is a push. Aussie Kiwi from the lows, still working. Andre's taking some heat in the DAX. What is he? He's bearish. All right. And then what you can do is you can go to close pattern in place and just look at all the stats here. So they say if you have a 3-to-1 risk to reward ratio, that you're going to make money being right a little over a third of the time. Okay, so we're right on these patterns in play 52% of the time. So if you're managing your risk and you have good R to R, you're going to be making real good money, grinding it out with us here. So that's my case. You could check out the entire history of patterns in play since ForexAnalytix started. And then I want to make a case for calling Jason and Trent, because if you're not getting a reimbursement from your broker, they all offer it. And if you're overseas, they could just apply it to your subscription. And these guys know a lot of different brokers, so they're going to find someone for you. Of course, our choices are limited here in the US. I know people that are using brokers here, people in the US that aren't regulated by, one of the major regulatory bodies, because of that reason that we don't have a lot of choices here in the US. So call our sponsors. You won't have to go through a bunch of phone prompts. They'll be there. And then if you want to learn, a very good education system here, section, okay, where you can learn what all the analysts are doing here. It's really kind of a one-stop platform. And what's also cool about the platform is the push alert. So you could, have it on a mobile device or a tablet, and you don't have to be chained to your workstation. Who's joining today? Okay, Omar, you took a 1 month. My view is, okay, Craig says it's his third year. I tried the rest and it came to the best. That's not the first testimonial I've heard about that, Craig, like that. And Omar, just keep this in mind. It's really hard to judge anything on a 30-day basis. You should give anyone that you're working with a quarter. And that's not exactly long term. People have down quarters. But thank you for giving it a shot. Let me know what you think. Let me know what you think on Twitter. In fact, guys, if you are very satisfied, or even if you're not, if you have a comment about what we do here to serve the community in face, or you're a subscriber, feel free to tweet your impressions in my stream or at ForexAnalytix stream and let the world know what's going on here. Okay, is it a deal? Give me a Y if it's a deal. Done? Okay. All right, so we have Lydia here today. Lydia had a problem a few weeks ago, and then I was going to have Nargis with us today, and it was my bad. I thought she hadn't confirmed, so I don't like to have dead air or no interviews, so I got a hold of Lydia, and she's going to be here. A good time to have Lydia to talk about cable and all the crosses, so she'll be with us at the top of the hour, and I'll get Nargis in as soon as possible because it was my mistake. You know what, guys, I make mistakes every day. And I want to make sure that we don't have dead air for the interview. Yeah, Lydia, oh Lydia, because what we do in the interviews, I can't count how many pearls and great ideas that I've gotten from our guests. So if I'm getting these ideas from our guests, you too can. So it's my goal to bring in the best minds in the trading business, although some of them aren't famous and they may not have 100,000 followers, but I can't remember, maybe more than a handful. And I think we've done 500 interviews here, 400 in the last few years. It's a great library to go back to because, everyone has a different style and you could learn something from all of our guests. So Blake, how are you this morning, buddy? And curious, what do you think that was enough of a dip in euro to that 1280 level that we're going to come out of here? That's a decent looking 4-hour candle here.
Yeah, I was going to say that, that was a really nice dip that I didn't take advantage of. I was focused on the Aussie, and I bought Aussie yen down there.
What time did that candle go down to 1280? I was sleeping, I think.
Yeah, that happened like just as I woke up, we were already back above 1290. So
yeah, that's what I mean. Yeah,
yeah, just it happened while we were sleeping. I'm so sorry. I'm sorry.
that's one of the toughest things for me. I was a futures guy for a long time. Rip Van Winkle, I was a futures guy for a long time, and at least markets closed. I found that's the toughest part of FX is the 24-hour nature, because you could have an area in mind, and unless you really trust your orders, and you have to learn to do it if you're in this game, you have to have limit orders in.
Yeah.
At important areas, because hey, I don't do crystal meth. I sleep. So, it's tough to have to count on during your waking hours you're going to get your price.
Right. It's sorry. I actually had a hard time getting to sleep last night, but when I slept great. But yeah, so the euro dollar, you do well. First of all, let me go back to your original comment. Is that trading a 24-hour market is difficult. You have to stay in front of a computer a little bit longer than most. One of the things I do miss about trading equities, actually the only thing I miss, is that when the market was closed, it was closed, and it's like, okay, well, I'm not doing anything from here. But with over the years, even since I've been trading, the market's been a little bit more focused on the futures market, and what futures are doing, and that kind of will alter what you're doing in equities, obviously, overnight. But in FX, yeah, you have to be real confident about your prices, and that's why I always talk about targeted entries, because you have to kind of foresee a little bit where you think a pair is going to go, and you want to take advantage of, like, for example, the euro dollar towards the 1280. I mean, if you were like, and this I didn't do, but it's like one of those things where you go, okay, well, I know the breakout point here was 1285. I want to put in a bid at 1285, put my stops in at 1260, and then get long overnight. And you wake up and you're in a profitable position, and you go, okay, well, now I can manage it from there. I do that a lot. I mean, I always have orders in overnight. I always do. And maybe 20% of the time they get triggered. The other 20% of the time I get up and I just cancel everything that I had open, orders, because I look to just take advantage of price action overnight if I think that something's gonna go. But the flip side of that is you have to have orders on top of those orders for protection. So, for example, if you put in an order to buy the euro dollar at 1285 overnight, and let's say there was something that came out regarding like the Bundesbank made some comments and the euro ended up breaking lower. You have to be able to go, all right, I'm buying the euro at 12.85 and I'm going to put in a stop at 12.60 just in case it doesn't work out. And I have woken up, gotten into a trade, gotten stopped out on a complete reversal, and I wake up with a loss. And then you got to do, you spend the morning, or for me, morning, digging myself out of a hole. So there is a flip side to, or, what I'm trying to point out is it isn't always roses. Roses and rainbows and sunshine, overnight. You can end up getting stopped out. But you have to be really confident in your technical analysis abilities, which I am. I'm one of the things that, for me, I think makes me good in that respect is I am very confident in what I do. If I get myself in a hole, I know I can get out of a hole. If I look at charts, I know that most times I'm correct in my assessment in the charts. What it really boils down to, as far as my trading goes, and I'm talking more on a personal basis, is just discipline. And I'm a pretty disciplined person, but I'll give you a perfect example of lack of discipline for me. I'm gonna tell you guys exactly what I did last night, and you're gonna go, wow, why didn't you just wait? But let me share with you what I did. So the Aussie yen, I traded this overnight. Okay, and I was long, and I just got out, and I just took my profits. Now, if you use ForexAnalytix, you'll see there is a pattern in play, and the pattern in play was at really the price that I wanted to be in. However, following the RBA decision, not the RBA decision, RBA meeting minutes, I bought some Aussie yen on this dip at like 80.15. Now you're thinking, okay, Blake, if you were waiting for a dip below 80, why didn't you just wait for below 80? But see, this is where the lack of discipline comes in, because I picked it up at 80.15. Okay. My initial position at 80.15. So let me just draw it to make it visual for you guys. I bought it at 80.15. Okay. And my whole thought process is, well, I'm going to start picking it up on the way down because, excuse me, I have to cancel my stop, actually. Let me just go ahead and get out of that. Because I wasn't sure that we would dip down here while I was still awake. So I'm like, okay, well, I want at least a little piece right now. And then, obviously, as I'm sitting there last night, well, I wasn't really sitting here. I was kind of running back and forth to my computer because we had some friends over as we were discussing some summer vacation, and which I'm gonna tell you guys here in a few moments what we planned, which is really cool. And maybe it might give you guys some ideas. I bought some Aussie yen here, and we had people over last night because we were talking about what we're going to do this summer, vacation with some friends, and then we dipped further to 79 79.90, and that's when I put in the pattern in play, because I'm like, okay, I wanted to be long down here. I just didn't think we were going to get down there as I was still awake. I thought we would drift down here into Europe, which we ended up doing anyway. And then, we spiked higher this morning. Now, I already got out of the Aussie yen. I took all my profits because my cost average was at 80.07, and I got out at 80.20, 80.19. Okay, but I had a pretty position because I got long some here and I got long some here, so my cost average was here. And I took all my profits off this morning. But what I'm trying to point out to you guys is, if you were just more disciplined and you're like, okay, I was waiting for just below 80 and I was going to get long, now you're in a really nice position, right? Hence the pattern in play. Now, my patterns in play happen to be more disciplined entries because I know it's being broadcast to are traders, you guys and gals. So I tend to be a little bit more, like I said, disciplined in my entries when I'm doing a pattern and play. But when it comes to my own trading, sometimes I don't have the best discipline, and it's not necessarily because I don't have discipline. It's more I'm trying to calculate timing and when I'm going to be in front of the computer, when I'm not going to be in front of the computer, that type of thing. So anyway, now if you guys are looking at the Aussie and you're like, oh, Blake, you're targeting 81 and change. Well, I am 81.15. If you don't and haven't seen it, is way up here in its previous support, 161% extension. So I'm targeting up here. So but it played out how I thought it was going to play out, the Aussie yen. It is playing out exactly how I had mentioned it. Now I am going to be buying dips in the Aussie yen, just so you guys know. I am now looking for dips back down towards 80 to get long.
Love your charts, man. I'm telling you. Just being here and looking at your charts and Steve's charts every day, I could come in with a clean slate and go, oh, I don't know what the heck to do today. And by the end of face, there's so many compelling ideas to consider.
Well, face is the place.
Where people become a trading ace.
There we go. Face is the ace where people become a trading ace.
But I'm not just, patronizing the team because I'm part of it. I'm telling you that that happens so many times. I'll go, I don't know what to do. But after watching your charts and Steve's, I know what to do. At least what to attempt, bro.
Well, I'm gonna tell you what I'm gonna do is you stepped away from the keyboard for a moment, and I said I had some friends over last night. And if you guys don't know this, I'm a big Star Wars fan. I'm a little, upset about the whole. I am a geek. I'm a little upset about the whole the last Star Wars episode because I thought it was done poorly, but that's okay. And if you don't know why I'm a Star Wars fan, it was the very first film I actually saw in a movie theater when I was 5 years old. Yeah. So my parents took me to see Star Wars. It tells you my age. In 1978, I went to the Cine Capri in Arizona and in Phoenix, and I went and saw Star Wars, and that was my very first movie in a theater. And that's when I first fell in love with Princess Leia. What can I say? Yeah, I was 5 years old or 6 or whatever it was.
Princess Leia and the gold bikini, right?
Oh God! Well, she wasn't in the gold bikini yet. She had the buns, and I loved her anyway. So you're gonna be a little jealous here. So if you guys don't know this, Disneyland is opening Galaxy's Edge, Star Wars Galaxy's Edge in Anaheim, California.
When?
It's May 31st. So here's the deal. This is the deal because we've been doing research and we have some friends that are avid Disney people, and even though their son is 11 years old, they still go to Disney, and they went for 30 days last year. 30 days at Disney.
Wow.
30 days. They had
Are they looking to adopt a 47-year-old man?
Seriously, but so these guys are like, obviously we're like, well, we want to go see Star Wars, the Galaxy's Edge, and they're like, we're in, So next thing you know, we're planning our vacation with them. We're only going for a couple of days, guys, just to let you know. But I'll tell you, the only way you can get into it is you have to stay on property. For the first month, you have to stay on property, and then they give you a reservation time, a 3-hour slot where you can go in. That's the only way you can get in. And they have that's not necessarily
true. How much
are
those rooms on property?
They're not cheap. Let me put it that way. They're not cheap. But
this is 400.
Nah, more.
Oh my.
More. But okay. But it's one of those things that we're like. I've been to Disney, and I've obviously you've been broadcasting here. You guys have witnessed me going to Disney at least a couple times since I've been here. But I was running back and forth trying to trade the Aussie yen while we were planning this Disney trip. And I was explaining why I got in where I got in on my Aussie yen versus getting in at the, waiting for this price. But anyway, just to let you guys know, I am going for a couple of days. I am going to stay on a Disney property, and we're going to the new Star Wars thing. within that first month, and we're going only for a couple of days because it's too damn expensive to go any longer.
Are you bringing your phaser? You already have the phone.
Oh, I got a no. I've got a lightsaber, buddy. I got to go to one too, and there's a story behind that. But anyway, but that was my Aussie yen trade last night, is trying to trade around the Aussie yen and navigate, trying to figure all this stuff out. But it's going to be pretty exciting because I told these people, I'm like, listen, unless I'm not going to go to Disney and risk not being able to see Star Wars and stay in, because if you don't stay on property, there's a pool of tickets you can get into, but you have to call in and you have to go to this blog, and you might, get the lottery where you get in. I'm like, screw that. I'm going to pay money to make sure that I get to go, because if I'm gonna go, I'm gonna go, and yes, instead of going for 3 or 4 days to Disney, I'll go 2 days to Disney, but I'm going to Star Wars. So there I'm going. So there we go. And that's it. And that's all I have to say about that. And
sticking to it.
Yeah, I'm sticking to it. So we're only going for a couple of days. It's, but kids, they were dying to go. So hey,
I had Star Wars pajamas.
Yeah, that's nice, Dale. I'm glad that you have Star Wars pajamas, and better than knowing that you have R2D2 underwear. That's okay. So anyway, but that's what I was doing with the Aussie yen last night, and it actually looks pretty bullish still. And by the way, just so you guys know, the Aussie dollar dipped because the market was looking at the RBA statement, thinking that a rate cut's coming sooner rather than later. There's some comments from McCran saying, that is getting the market thinking otherwise. Bottom line is the Aussie dollar is at the 200-day moving average is at 72 cents. And frankly, if we break above 72 cents, it does open up the door for a squeeze higher. Keep in mind that, we're inching closer to a China-US trade deal, which is, could really open the door for some upside here in the Aussie near term. Like I've been telling you guys, I do want to sell the Aussie following some sort of announcement of a trade deal. There's a comments. I want to read this to you from overnight. This is out of Market News International last night. China is pushing U.S. to grant President Xi Jinping a state visit to seal a high-stakes trade deal, which is likely to leave tariffs on $50 billion in Chinese goods in place and only reduce levies on another $200 billion in imports, despite recent progress in talks. Sources from both sides with knowledge of the discussion told Market News International, which, hey, I still believe that any China deal is going to incite a China slowdown in the future. That's why that a China-U.S. trade deal is going to be good for Aussie right at the onset, and then we want to look to fade Aussie, maybe a week, maybe a couple of days following any type of China-U.S. trade negotiation completion. So what I'm looking for in essence is the Aussie to do something like this, and then that, and then this, then that afterwards. So those are just, that's why I continue to play the Aussie on the long side, whether it's Aussie yen, Aussie New Zealand, and I'm a little bummed out about the Aussie New Zealand since wait, do we have news coming out? No,
not really.
Just the Canadian data. Okay. Yeah, just if I look at the Aussie New Zealand, I'm a little bummed that we dipped to this trend line, but I'm really looking for a dip down to 105.50 to re-establish those longs. So anyway, I'm going to pass it over to you guys. Hope everything's going well. Good morning.
Keep it for another 30 minutes.
Well, you know what,
Blake. By the way, with the Star Wars theme, our friend Forex Gal says, "Blake, you are my father." Have a great time.
You are my father. wait, that was like an Arnold.
Wait a second. That was an Arnold Schwarzenegger playing.
Arnold Schwarzenegger, Darth Vader.
It's not a tumor. It's not a tumor.
Anyway, I'm really excited. There's one ride that's not going to be ready until they say December. It's like the biggest ride, but all the other rides will be open, and it's supposed to be the biggest area in the biggest. You know, if you go to Disneyland in California, there's 5 parks. So this will be, I think, 5 parks. So there's going to be the 6th one inside, or there's 4, and this will be the 5th. One of the 2, but it's supposed to be the biggest area of all of them, which, you know, every time I'm in Disney, the last couple 2-3 years, you know, you get on Thunder Mountain and you go around the mountain, and every time you're around the mountain, you can kind of take a glimpse at what they're building, and it looks massive. So I'm super excited. My kids are, you know, peeing themselves. They're so excited, and we can't wait. So it'll be fun. Yeah, just a couple of days, but you know, that's a nice thing about living where I'm at, kind of like Dale, is I can get to Disneyland with a 5-hour drive, and I'm there. So it'll be fun.
Do I have to kill to join?
All right, guys. Hey, enjoy the day, and thank you all for tuning in. And I'm glad Lydia made it here, because last week we missed her. So
Indeed.
All right, guys.
Yep. Thank you, Blake.
Bye.
All right.
Cello.
So, Steve,
hunting.
again, not that much to say. We did have, like Blake said, the RBA minutes, which were a little bit more dovish than expected. So the Aussie overnight was a little bit weaker. And frankly, any central bank meeting that we have, I see, you know, with very few exceptions, I see no reason for any of them to be hawkish. You know, the Fed, the ECB.
First of all, why would they want to be? I mean,
yeah, exactly.
Irrespective of their outlook in having to do with, you know, the local economy.
Yeah.
So why would they want to be? Everybody else wants to be dovish. So, you know, if for some reason you turn out to be hawkish, then you're going to have some massive appreciation, because you're going to be the only one in the hood being, dovish. So one reason they would definitely avoid doing so is that, you know, currency wars in essence.
Yes. So apart from that, we had some European data. ZEW economic sentiment came in a little bit better than expected. Actually, no, a bit better than expected. But the main data we had this morning was from the UK, where average earnings index came in at 3.5%, as expected, which is it's a pretty big number. It still remains way above the inflation rate, and we have to remember that the Bank of England keeps these 2 numbers, the CPI and average earnings index, very close, and they monitor them to see the gap between them. And if people who listen to FACE will remember from a year and a half ago, where earnings was below inflation, where inflation was spiking at 3% or whatever it was, and earnings was 2% or 2.2%.
Little correction, below reported inflation.
Yes, okay, yeah. But the main point is that they're looking at this gap, and whenever earnings are below inflation, that's a pinch on the consumer, right? Because the consumer goods are rising faster than their earnings are. Now we have the opposite. Inflation is at 2%, earnings is at 3.5%. So this gap is pretty healthy. So just something to keep in mind, that it's another number out of the UK which is not bad. Decent. It's very decent. So. In the spirit of the past few months, we have all this uncertainty, which has now been prolonged for maybe another 6 months. It could be earlier, we don't know. But in the meantime, we are seeing some numbers which are still constructive. I'm not saying that the UK is thriving, but it's not collapsing. It's as
definitely doing better than many expected. Let's say that.
Yeah. Even in the middle of all this uncertainty. So. And what else we have? We have New Zealand CPI, that's later tonight actually. And that's it, not much else happened. I mean, we had Mnuchin talking about the US-China deal again, and he was saying, a lot of progress is being made. We're in the final laps, or however he said it. But frankly, it's just still all talk as far as I'm concerned. I mean, eventually, I am with Blake, and I think you said it, Steve, as well, that eventually there's going to be some kind of deal struck. But let's see what the details are going to be, because that's going to be the important part. And that's
the China situation is the exact opposite with the Brexit situation. while everybody is hoping that there is going to be, some Brexit resolution and some kind of a deal, better or worse, at least it's going to get the uncertainty out of the way, which is, huge for an economy. It's the exact opposite with the China situation. I bet that nobody wants the China deal to go through. It's much better as long as there are rumors, that there is a deal underway and they're close to agreeing, etc. The market keeps buying the same rumor over and over and over again. And I'm 100% sure that when we get a deal, it's going to be underwhelming in comparison to expectations. So, so if somehow magically they could prolong getting that deal, but without, disappointing the market that there's going to be no deal for a year longer, that would be perfect for them. But, sooner rather than later, we're going to have to see some kind of a deal. And as I said, I believe that it's going to be disappointing in comparison to expectation. I believe it's going to be, another kind of NAFTA revamp, something that is not going to be really strong, that it's not going to be a game changer. Of course, we have to wait and see, but that's what I expect from that. Side.
By the way, Steve, have a look at gold afterwards, because
a lot of people are writing. A lot of people are writing about gold, and I have to say I'm really sad to see it go. Oh, I'm short now, but I remember, so I'm not. It's not really unexpected, to be honest, because I actually yesterday I did the chart of the day. Keep in mind that even if you're not a ForexAnalytix subscriber, you can always visit our blog. That's a free part of our site. Yesterday, I once again wrote about the chart of the day, saying that gold has spent the last 2 months consolidating within a flat bottom triangle. A break below 1280 opens the downside for at least another move lower. 1265 next area of support, while a break above 1310 and the 50 DMA points to a move towards 1360. Those of you that are here on Face, even if you're not daily, you know that I still favored the downside. That's why I'm actually short. So now that we are triggering the stop losses before 1280, below 1280, I think that the chances of a continuation lower are increasing. You can even see the RSI breaking, the 4-hour RSI breaking to oversold territory once again. And at the same time, if you remember, I mentioned specifically yesterday that keep in mind that within the same day, we might see gold, silver, and platinum breaking below key support areas. So gold is doing the move. Of course, we need to give it a little bit of a time, because you can also always get a little bit of false break. But if gold confirms this move, probably silver is going to follow suit by breaking below this 1480, 1490 support area, which is going to be also, a very bearish development, since this was the resistance area of this. You want to call it a rounded bottom. From a technical perspective, it was also a rectangle. So the rectangle's resistance was at this area. So this having to do with what I've talked about multiple times. Market having memory. This is a strong area of support, and we've seen it. We've seen that this is valid because we've tested it multiple times, and this area is holding. But if it does break to the downside, there are definitely going to be several stop losses that are going to be helping the metal accelerate to the downside. And here is platinum. Let me take you on the daily chart. Here is platinum, that is also quite close to this rectangle's previous resistance, which might act as support. We tested it actually yesterday. We rebounded from there. As you see, we closed way off the lows. So platinum also, ahead of a, strong support area. So let's see what's going to happen, because there is a good chance that we're going to have nice developments with the metals, with the metal complex today. There is a question about Euro USD. I wish I could help you with that. I can help you with that, and I've been helping all of you with that, since a long time ago, by saying, I think, giving you the best advice that somebody could have given you about the pair, which is stay away from it. Simply because you will just be investing capital, tying up capital actually, in a trade that more or less is unwilling to do anything. So in my opinion, having to do with Euro And on a second level cable, the best thing you can do is wait for them to finally pick up in momentum before even considering getting involved with them once again. So same situation here. Now, if you want me to give you levels, that's easy for me to do. Unquestionably, this confluence of supports at 1, 11, 80, 90 is, has proved its value. On the other hand, I'm monitoring this trend line as resistance. Currently, more or less confluences with the 61.8 of this last leg lower. So, in essence, 113.50 should be formidable resistance. If we do break above 1350, it's going to be a first sign that perhaps something is about to start moving in the Euro USD, and in this case, to the upside. As you see, after seeing this, this area hold once again, there are possible bullish interpretations, because first of all, you can interpret this as a descending wedge, which we know that it has the potential of breaking the upside. You can even look at it. You can even redraw the trend line support like this, okay, which doesn't change the fact that it still looks like a descending wedge, right? You can see it here. So this would be likely bullish formation once we break above 113.50. Also, this can prove to be a double bottom if we do break out from 114.50. So breaking above 113.50 is going to be a first sign that perhaps something is changing for the Euro USD. Breaking then above 114.50, 50, sorry, which the 200 DMA is also there at the moment, is also going to trigger a double bottom scenario. So any way you slice it, there are several interpretations that can show that Euro USD is actually turning higher. But in order for any of them to come in play, we need to start breaking upside targets, with 113.50 being the first one. Until that happens, so as long as we trade below between 111.80 and 113.50, I find absolutely no reason why you would want to be involved with this pair. Absolutely no reason at all. Okay, more or less the same situation with the cable. You can see that the cable is currently within a triangle. Depends on how you want to draw it, because you can even draw it like this. So if you want to ignore some of the wicks, you can even see it as a flat bottom triangle. You can see it here. Bottom line, nothing to do with the cable as long as it's above 130 and below this descending trend line. As you see, even the RSI is currently exactly in the middle of the range, and even the RSI's volatility has gone down to 0. I mean, just look at it. It's like, RSI has flatlined, literally. So at some point, both of those pairs will start moving again. There's no question about it. But we're not there yet. And until we get to that point, which I'm going to be more than happy to start including once again those two major pairs in my list of choices to trade, I just stay away from it. Of course, I have them up on my charts and look at them like several times per day. I mean, 100 times per day. But the last time I saw them and they said, oh, I should be doing something with them, I don't even remember when it was, right? So that tells you all you need to know. And the fact that they've been coiling and haven't been doing much doesn't mean that they should start doing something this week or the next week. I mean, this situation might go on for another month, for another couple of months. Who knows? That's why I'm a big. That's one of the reasons I'm a big advocate in having a look around in multiple markets, because this takes away your urge to trade something and having to trade something that isn't really producing some kind of a tradable opportunity. Okay, when you're monitoring a lot of markets, statistically speaking, there should be something that is really looking nicely, right? Now, just a little update on one of my trades. I wanted to be careful with my CAD yen. I said it yesterday here on the webinar that I would probably trail my stop loss in this CAD yen trade, and actually I did so, as I mentioned that at this area. So actually, I got kicked out at break even. I don't like the reversal that we saw after this little triangle. This was quite a powerful move to the downside. So I'll probably also close my. I was waiting. Actually, I was in the webinar. I would have done it already. I wanted to close my pattern in play at break even. It's almost at break even now. Because I'm afraid that even if this is a corrective move, we should see at least one more leg lower. In essence, we've now invalidated this as a potential inverted head and shoulders formation. Okay, so we might see another leg to the downside before seeing a higher move. And keep in mind that it's a nice thing seeing a formation and trading it, but you also need to be flexible. And I don't like this reversal, so I'm out at break even, and I have no regrets about it. Now, if it wants to move higher from here, I'm not going to be in the trade anymore, and it's okay. Sometimes you just get out of a trade at the worst possible time. But I prefer that than being in a trade that actually starts working totally against you. Now, having to do with crude, because as usually we have questions about crude. I'm still a believer of what I said yesterday. I actually closed yesterday, as I mentioned, my 1/3 of a position that I had from 84, so I booked some profits because I really don't like this formation here. So far, it looks 100% corrective. So I want to have more dry powder to actually short this higher, because it is likely that we might be going higher, judging from the price action we've seen after topping out here. I mean, you would expect that a failure would produce more downside, but it hasn't done so. So, the more the hours pass and, crude isn't accelerating to the downside, it's not literally breaking down, the higher the possibility that the next move is going to be to the upside. Okay, so I booked some profits, holding 1/3 of a position, still short, because you never know. Sometimes you might have a slow start. I've seen that happen in the past. It's not the most likely scenario, but it can happen. You might have like some distribution initially, and then a market breaking down. That's why I'm not completely out of the position. That's why I didn't book both of my entries. But this way I can feel better by only having 1/3 of a position. I can add higher. So crude still looking decently, very decently actually. Okay. Now, having to do with the correlated markets, USD CAD still doing nothing here. As you see, I mean, this market is kind of funny because if you consider it, the USD is consolidating within a symmetrical triangle, which is found within a channel, which is found within a larger channel. So a consolidation within another consolidation within a larger corrective, likely corrective, because this formation does not look impulsive in any way. Okay, so USD CAD more or less coiling, and at some point I believe this is another market that's going to break out, and when it does, it's probably going to have a very nice and healthy follow through. But it's not doing so yet, and you have to respect what you get. Who is drawing bullish head and shoulders on uptrend? I am guilty as charged. I've said it in the past. There is a debate. There is a debate if head and shoulders formations can also be continuation formations. So you have to take them with a pinch of salt. But I've seen them work as continuation formations as well. Of course, I respect them a lot more as reversal formations. But that doesn't mean that I'm not going to notice it on a chart. Plus, as I mentioned when I initially opened the trade, there were more reasons to be bullish at that time. Besides a possible inverted head and shoulders formation, that was a corrective pattern regardless, and a small flag in any case. Which price would confirm that crude is going higher? In this case, in this case, in such a tight consolidation, the only thing that would confirm will be a break above the previous high, because it's not like it's a correction that has retraced, a decent percentage of the prior move. So since it's a very tight corrective move, it's a horizontal consolidation, more or less, a break above the previous high. That's the only thing that's going to confirm. We have a question about Euro-Swiss. Euro-Swiss is still doing its thing, by the way. Let me show you. And when I say its thing, is this thing. Okay. So Euro-Swiss still, trading between this 111.80 support area. We briefly broke below it, and this horizontal resistance area at 114.50. Needless to say, the closer we get to 114.50, the better the risk reward for another move lower. Okay, I wouldn't be blaming anybody that would, start sorting the Euro Swiss here with a stop loss above, this area. I mean, from a risk reward perspective, it makes perfect sense. Okay, and anyhow, Euro Swiss is a pair that has gotten used to trading in ranges with, very low volatility. Okay. So that's what I think about Euro Swiss. There is nothing more to say about it. If we do see a break above 114.50, that's going to open the door for another move towards 117. But, when and if, okay. Until that happens, I think you need to, respect the potential of another rejection and, remaining in this range. As you see anyhow, due to the lack of FX volatility, so many FX markets are currently trading in ranges or one type of or another type of consolidation or corrective patterns. Okay. There's a question about, I lost it. Where is it? CAD Aussie yen looks somewhat better than CAD yen. Absolutely, yes, it does. And I'm gonna, although Blake covered it, I'm gonna cover it as well. But there was first a question about Swiss NOK. Oh, Swiss NOK. I don't even have an idea if I've even ever, let me see, touched this chart. I mean, this is, I probably haven't. Should I? Oh my God, it's a horrible looking chart. Just look at this. Just look at this. I mean, if you take out of the equation this spike, which was intraday spike, this is a pair that has been trading from the very first days of 2015 until today in this limited range. So, why would you want to do something about it? I mean, if you want to do something about this pair, is range traded. So every time it gets closer to 9, you want to be short. Every time it comes closer to 8, you want to be long. There is nothing else to do. Now, if I had to do some short-term analysis here, the path of least resistance is definitely lower currently. Okay. Why? Because I see a decently sharp, of course, move lower, correction, and we're breaking lower. So if I had to do something, I would be short here. But as I said, not my type of trade within, that type of a range. I mean, we've been oscillating, since like 4 years ago. Like, nah. Anyhow, short-term bearish, I think. Against 850, 855, it's bearish. USD NOK, sure. There you go, on the daily chart. That's why, you can see why I insist that USD NOK should be considered bullish as long as we trade above 840. You can see it here. Sharp move higher, long-term consolidation. We broke above it. We've retested this previous trend line resistance multiple times as support. It's been holding every single time. And if you zoom in, you can also see that the 200 daily moving average is now supporting price here. So bullish against 840, as simple as that. Now, if we do break below 840, that's going to be a totally different thing. Okay, it's going to be a bearish development. Until that happens, I think being long against 840 is probably a very decent idea. I'm actually long just 1/3 of a position, looking to add either lower towards 840 if I see a nice reaction, or higher if we start breaking above a channel I've shown on the 4-hour chart. Here's the channel I'm talking about. Okay, so I would be buying more either lower if we see a reaction or above this channel resistance. Euro NOK more sexy. Okay, never had this kind of an approach for a pair, but whatever makes you tick. Yeah, there is a bullish scenario with the Euro NOK, and the bullish scenario with the Euro NOK is this descending wedge. But there's no guarantee this is going to break to the upside. Okay.
Hey, Steve.
Absolutely.
Steve, since it's so sexy, show us a garter belt formation.
A what?
Garter belt.
What's that?
A garter belt holds up nylon stockings.
Okay, if you say so.
Yeah, I can't believe you don't know what that is. All right.
Nope, I don't.
Okay. How about a girdle? Do you wear a girdle?
I have no idea what that is.
All right, I'll let you finish.
So yeah, there is a bullish case scenario with the Euro NOK, and that is this wedge here. I'm turning it into blue. There it is. This wedge here. So, obviously a break below the previous low, quite bearish. If we break this wedge to the downside, actually it's a very bearish sign. So in essence, it remains bearish, but if we break above 960, I think we're going to see a very nice reaction to the upside. Until that happens, I think there's nothing to do within the boundaries of this wedge. Okay, so Euro NOK is potentially a nice trade to be, but not yet. Garter belt is similar to that chastity belt. So many unknown terms for me today. I don't know if we should turn this into something else, but whatever. Ethereum and MXN. Sure, let's have a look at both of them. I'm still long my last position in Ethereum, actually. I'm not sure if I should be, but I'm so much in the money that I don't really, notice it that much. Ethereum, I can tell you one thing for sure. Nice reaction from the previous low once again, right? So one thing is for sure, you don't want to be short USD MXN. You don't want to be long USD MXN. Sorry, if we break below this low. Okay, I'm not going to call it a double bottom yet, because in order for this to be something like a double bottom, we need to see a break above this high. Then we can start talking about a potential double bottom. So another rebound from the same area. RSI on the 4-hour chart was already showing some signs of divergence before we rebounded. There it is. Okay. So respect this low. If you want to trade to the long side against this low, fine. Now, on the other hand, don't forget the big picture as well. The big picture is that there is no trend as long as we remain in this long-term symmetrical triangle. So even if we did break below this low, I wouldn't be jumping the gun being short as long as we remain above this 1860 trend line support. So, but keep in mind, if we do break below 1860, that's going to be a very, very bearish development. So keep that in mind. So nice rebound so far, but would that be enough to turn me bullish? No, it wouldn't. Okay. And last but not least, Ethereum. Ethereum, both a bullish and bearish interpretation possible here. But in order for me to turn really bullish on Ethereum, I would want to see this previous high getting taken out, and this ascending channel the same. But this ascending channel, if you have a look at the bigger picture, this can easily just be a little corrective move, and we
Yeah.
might have a lot more downside following that. Anyhow, I've booked a lot of profits in this one. I've done great. Still holding 1/3. I might actually book this week the last 1/3 of this trade. I just, since I've made a very nice trade with this. I'm holding to that one last third. Perhaps we get some one more leg
Manipulation.
higher. Yeah, some kind of
Yeah.
a vertical
Story.
move, because some kind of a vertical move, because we've seen vertical moves in cryptocurrencies. Okay. Hi Steve, can you please also take a look at the DAX? Yeah, last thing, and then we go to the interview. I'm still long DAX, and this trade is doing very nicely. I'm also long FTSE, which is also doing nicely. Keep in mind, we're testing. If you see the daily chart, we're testing confluence of resistances once again. But if you have a look at the 4-hour chart, there it is. That's when I actually went long on a break above that flag. We are approaching now my first target, which is this extension, the 161.8% extension of that move at 12,167. So I'll probably going to book some of my longs there. And the same deal with FTSE. FTSE is breaking outside of this bull flag. Next target 7,550. So enjoy the interview. We have Lydia today, you said, Coach, right?
Yeah, bro.
Let's hope that
And you know
Lydia
what? When you're
can
talking
shed
about,
some.
go
Yeah.
ahead.
Let's hope that Lydia can shed some light in
Oh,
what she expects to happen with
I
the
expect
cable
this
next.
this interview to create massive volatility in cable because Lydia's here. Will go out on all the wires and Twitter, and people try and front run her. But Steve, when you were talking about Ethereum, all that came to mind was the age of Ethereum, age of Ethereum. Remember that song?
No.
The age of
So many.
Aquarius. Anyway,
Okay, yeah,
all
yeah.
right. I forgot the group that did it. I know Lydia remembers it. So Lydia, thank you, Steve. Lydia, so great to have you here. I'm so glad you're feeling better because the FX community needs you to be in top form. Welcome back, Lydia.
Hey,
How are you?
hey, Dale. I'm good. Thanks for having me. Thank you so
Uh,
much. Yes,
well,
feeling a lot better. Stronger.
welcome back, Lydia. So I noticed on your tweet, I sense a little bit. You said, was what we were going to talk about a couple weeks ago, sadly. And you know what? We can't write the narrative, right?
Right.
So I
Right.
mean, it's hard to be patient and
Yeah.
wait for things to begin to you know turn one way or the other. But how do you handle these times? Do you kind of walk away from the market, or do you shorten time frames to look for, scalps? What's your way of dealing with it? Because it's almost more pressure sitting on the sidelines. The
Sure.
waiting's the hardest part, Tom Petty, than it is being in a trade, even if you're in a drawdown.
Right. Yeah. So I think it's three things for me. So first, I know my trading style. I know when it works and when it doesn't. So I think it's really super important that we have to know ourselves and how we trade and in what environment. So I know that my style works best in trending markets, and I know we're not trending. The pound is not trending. It hasn't trended for maybe 2 months,
Okay.
and we're in some really well-defined ranges. So that's why I said sadly.
Right. Right.
We haven't broken out yet. I thought, with some kind of resolution around Brexit, which yes, it's now delayed out to October. I thought we'd get some movement in pound. We haven't. Um, so the second thing is, shorten up your time frames, or just know the market that we're in and trade it accordingly. And the third thing is not. So I've actually just been like almost mantra chanting. I have to remind myself it's better to be on the sideline than just to throw out a trade. And I know the conditions under which I want to start really being aggressive, and that is when we break out. And so it's just like, Lydia, we haven't broken out yet. We haven't broken out yet. Oh, we're in a range. Okay, we're at the top of the range. Take this trade. We're in the middle of the range. Don't trade. Don't trade. You know, it's just, I really
Yeah.
have to talk myself out of not trading, because it's been, I mean, for me, it's been a month and a half.
You know,
And
Lydia,
that was a
I
month and a half
actually,
to
I
figure it
actually
out.
have to, yeah, I actually have to write those things you said down. And you know what? It's less effort to see it than the repetitive self-talk, because you see something in writing, it's NLP, and you know, the visual of it rather
Right.
than the intangible thought rumbling through your head.
Yeah.
Anyway, may want to write a couple words down that are key words for you, and you'll just look at it and you won't even have to say it. You'll be
Yeah.
reminded of it.
That's true. Okay. Yeah.
Anyway, so you haven't traded, you said, in what, month and a half?
I haven't traded the way I'd like to. I've taken a few trade ranges here, range trades here and
Okay.
there. Pound Kiwi has a nice defined range.
Okay.
The pound dollar has a nice range. The euro pound everything's ranging. I mean, everything's
Okay. All right,
so
so let's talk about your ranges and levels that you consider to be critical so that we could coattail you when things happen.
okay. This is the pound dollar taking a look at. I mean, it's been grinding. It had been grinding lower. If we just look at a daily chart, I think this is what you guys call is this a descending triangle, where we're having this
Yeah.
support at 130,
Yeah.
and we're having these lower highs here, and
Yeah.
so I'm waiting for that breakout. And I think this is it should break. The thought is that it would break out to the downside. To me, obviously here it's a fib move. It's just really finding support against 130, which is also close to the 38.2 Fibonacci level. But when we zoom in, we've really just been in this really tight 100 pip range between 131.20 and 130 to the extreme, but 130.50. I mean, this range has been tight for all of the month, so about 2.5 weeks now. I haven't traded the pound dollar since we broke down from 133 down to 130, and then it just hasn't. I don't sell these tops here because to me there's also a larger range between 133 and 130. So I don't take these 131 trades, because to me it's the middle of the larger range. So I
Could also be some stop hunts in those ranges too, where they, how the market will, at times they're magnets for market makers looking for liquidity.
Yeah, I think 130 is a big level for that. I think 130 is a huge level. So every time we kind of we have stop running at 130 and we break this level, we always
Mhm.
close the week above it and we find ourselves going higher. So right now, it used to be that we were going as far as 132, 133. Lately, for the past couple weeks, we've been just getting as high as 131, 20, 131. 50, even some exchange, and some, but mostly it's just been 131, 131.20. And so for me, for the pound dollar, I need to see a break above 130. I need to see a break below 130. And even then, because I don't have a bias on direction here. I come out to my daily chart and I still see it in the fib. So I'd like to see it above 133.50. I'd like to see it below 130, and I just would be kind of tentative because I think we'd find buyers still in all the way through here up until this support. And this is, our big time support. Our first big support after 130 is 127.75. So pound dollar for me has been difficult. It's been hard to get a read on the dollar because even though fundamentally there's some bearishness there just with the Fed turning dovish on us, the dollar is refusing to sell off in a sustained way, especially against the euro. Against the euro, we've seen a lot of dollar strength. So it's just been hard to get a handle, and that's fine. It's just, I move on to the next pair. And, I don't trade or situation.
Talking about something, and I'm glad you're here today. I've been talking about, how many people have been bearish euro pound and the 86.40, 86.50 breakdown level on the weekly.
Yeah.
And they've made no money.
Yeah.
And it keeps coming back there. And, I love trades that are failed breakouts. And I'm just thinking that the market is just saying, oh, okay, you missed the breakdown at 86.50. I'll give you another 3 months to decide to sell the breakdown, because I want to make your trades, even though you're late on the trigger, we're going to let you in here, Dale. You can short it. What do you think? Do you feel jaded about breakouts that don't pay off maybe one retest, but multiple retests? Do you become jaded like an old guy like me, Lydia?
Well, I don't jaded, or the market starts to mess with you, because now you're starting to think, well, maybe we wouldn't break down further. And I just, I come back to the weekly chart and well, we've been in the range above 86 and 86.50 for a year and a half. And as we know, if you break out one direction or another, you tend to trend in that direction. So it's hard for me to give up the bearish case for the pound, for the euro pound. My bias is that it goes to 83 after this breakdown. And like you said, we keep coming back into 86.50, and here we are again. And, sellers are stepping in. We're having this battle out. It's moving off of 86.50 right now, 86.47, and so sellers are stepping in here too. Yeah, it keeps coming back in, and
just feels like there could be a hell of a squeeze from people who got very bearish on a breakdown. They've had no reason to cover their shorts yet, but I think the market's about to give it a reason.
Yeah, I think so. On the daily here, we just keep getting these failed lows. So this was a great pop. We had a bullish momentum. I put this here because I saw this as what is this, a flag?
I like that. And you call that a flag?
It was respecting it, and then we broke out of it a couple days ago. But anyway, I was just looking at that, just seeing, okay, there's potential for this to pop higher. We have this building momentum. And the RSI, we have these failed lows. So even after this nice pop higher into the 38.2, and we slammed lower back to 85, or even broke below 85 for a day, and then we went right back to 86.50. And so ever since we can't, and even
like the beach ball. You ever go, go to the lake and you keep trying to push it down and it pops up?
It pops up.
Yeah.
And we can't even get new lows. We didn't get new lows after that. So this failed low for me is a signal that we move higher. We move into 88, 87.50, 88. And, according to the Fizz, we can go as high as 88.50, which would turn a lot of people bullish, I think, which would be, just one of those perfect opportunities for Mr. Market to just say, ha, and drive everybody lower. But just to keep in mind that this, not only could we go higher above 86.50, we could go 200 pips higher and still be in a correction. And so, just keep that in mind, that even a breakout above 87 could still just be a correction and an opportunity for sellers to step in. 88.50 is that big time support, now resistance level, if we can get above 86.50. So, here we are, we're falling away. So it's another frustrating market, because when we broke below 86.50 and we closed the week below it, and we closed below 86, I just knew that we were headed lower, and it was going to be a clear move to the downside, which also meant, though, a strong pound, which kind of didn't jive with what was going on in Brexit at the time. But if we remember, at the beginning of the year, pound was finding strength off of Brexit delays, a possibility of delays, a possibility of no deal, everything that was was turning the market bearish against the pound last year. It was bullish for the pound this year. So it's been, the sentiment is very, very strange. So I thought a delay out to October would give the market reason to buy pounds or reason to move, period. And we just haven't even gotten that. So I don't even know what the impetus is going to be to finally break us out of some of these ranges.
Yeah, well, I kind of feel a short squeeze coming, and their heads will be squeezed so hard their eyeballs will
Euro
pop
pound,
out.
seriously. Yeah, I think a move to 88.50 is not to be ruled out.
Mr. Pinkert's looking for 93, 94.
Really?
So, yeah. So anyway, go ahead. It's on tape. You know, grill me later when it's 83. So, Lydia, I know you kind of have. I'm wondering, because every time we talk about the guppy, you also have some view or bias on the end. So why don't we go there?
Okay. Yeah, I mean, for me, the yen has actually offered a nicer, larger range, but it's range bound nonetheless. So let's move this out to a daily chart. So this is what I've been watching, this 143 for the last couple months. And the fact that we're finding resistance at 147 should be bearish for the pound yen. And yet we're getting kind of this same thing where we're finding that we're finding buyers step in at these support levels, and now we're getting higher lows. So the pound yen has just been it's been a longer range, but it too is also range bound. And I guys, like, that's why I said again, I alluded, like, I have no bias with the pound right now.
I don't blame you.
It can break out to the upside or to the downside. I just wanted to break out. And then we saw with the euro pound, we got to break out, and then it stalled. So I really have no biases here, which is tough. It's tough for me because it's my style. I know
because you want to tell people something. You're involved with the public, and Lydia, but it's wisdom now to say I don't know. When I was young, I was so uncomfortable with saying I don't know. I would find something to say.
Yeah, you had to have answers. Yeah, I'm just like, guys, look, shorten your time frame and don't stay in long time. I've just been able to pull really little bits of little chunks here and there. I mean, very little, like 10, 20 pips for me, and that's very small, and that's all I've been able to pull out of here. Because I'm just playing the ranges, and my style, it won't yield much. But I know we're in a range bound market, and I have to play it accordingly, or not at all, not at all. So
okay. Well, you said at the beginning, I think you brought up pound kiwi. There's better trends against the commodity currencies, right?
Well, look here.
Oh, no, I guess there aren't.
This is the range I've been playing. It's a tight 100 pip range. It's been golden. This is the one. This is where I've been able to find trades. It's 194.15 to 193.19. It's 100 pips. It's just been perfect. When we're at the bottom right now, you buy it.
Since the beginning of the month.
Yeah,
you've had that range.
I'm telling you, it's been
multiple opportunities just to range trade.
Yeah. So I've been getting.
Why would you pick this one? Tell me what you like about this, because everything else we talked about was in a range. What about this formation or range attracted you to trade this rather than the other sideways ranges we talked about?
So the other ranges we saw higher lows, we saw lower lows, or we saw higher lows, or we saw lower highs. This one has just been consistently steady. It hits to the top of the range, it turns around, it hits the bottom of the range, it turns around.
It's more defined.
Exactly. And it has less of opportunity. We've seen less times where it has stopped in the middle of the range and turned back towards the bottom, or stopped in the middle, turned back toward the top. It's just hitting the top to the bottom, top to the bottom. It's just like it's oscillating so beautifully that I've just stayed right in here. If I'm taking a trade, I'll stay here. If I'm in, again, and it takes discipline to trade a range, because you don't want to step in the middle of the range in either direction. You just don't want to, because you never know when it'll trend again.
What do you try and pull out of a 100 pip range when you go in?
I'd like to try to get out about 60 pips, 70 pips. If you know,
Okay.
if you're getting the top and the bottoms
Yeah.
pretty well defined.
2/3.
Yeah, yeah,
Okay.
yeah.
Yeah,
You want to
you
come
know,
out before
you're
we
not
get to the
trying to get
bottom.
the whole range because
No, I don't think that's realistic, and you'll find yourself getting stopped out at break even or
yeah,
stopped out because you held it too long, being greedy.
yeah,
Yeah, just try to capture a majority. It's like trend trading. We don't try to get the entire trend. We try to get a nice meat of the trend, which is why I teach, retracements, coming in on retracements. You don't need to get the first move, but the next move is likely to be the 300 pip move, and you can get a nice size of that. So, yeah, this is kind of where I've been living.
okay. Well, Lydia, you know what? My trading warrior sister, you lived up to the promo that I sent out last night about your being a disciplined pro.
Oh, thank you, Dale.
Okay, and you know when you talk markets, it shows, and I really appreciate you being here. I'm so glad you're feeling better. Why
Thank
don't you
you.
take a little time to tell our viewers what you do and how they could hang out with you?
Thanks. Yeah. So always, you can catch me on Twitter at Faith Might. And I've been on there forever, it feels like, almost 10 years. And then everything goes on the blog. I like to say it all begins and ends here on the blog.
Did I ever ask you where that picture
faithmight.com.
was from?
This picture? Oh, this
Yeah.
picture is it's the San Francisco coast. This is
Oh,
actually,
okay.
what beach is this? Down
Nice.
here. So I went, you can hike down to this beach down here. You can
Yeah.
almost have like a private beach. Yeah, this is like San Francisco.
Beautiful.
Just north of San Francisco.
Cold
Yeah.
water though.
Yes, freezing.
All right, go
Hot
ahead.
day, freezing water.
Yeah, yeah. I'm not from
Yeah.
Finland where I go from a sauna to an ice plunge. I can't do it. I'd have a heart attack, Lydia.
it can do that to
Yeah,
you. Yeah, Pacific Ocean is not forgiving. So
yeah.
yeah, I'm also an investment advisor. So if you click on Invest with Us, you can find out more about that, and then click through to the firm's website. Learn to Trade. I started offering courses and mentoring and coaching for traders who want either newbies, and if you're new to markets and you just need some solid base foundation. I teach 5 indicators. I teach from a lens of a swing trader. So I do encourage that you find some day traders. We have amazing day traders that you can follow and learn from as well, and figure out which style works and resonates with you. I think for all of us, we learn from somebody, we learn from a mentor or a teacher, and then eventually we adapt that thing to ourselves. And I think trading is very much something that has to be customized and personalized to your personality and to your lifestyle. But I just wanted to offer something that, gives you a base understanding of just reading charts. It's not even just Forex. It's really just how do you read a chart? How do you analyze price action? And then if you want to go further than that, I offer some mentoring and one-on-one coaching. So that's Learn to Trade. And then all my thoughts on just market commentary, period, is here. I have an associate now, so he's also does a lot of the stock. I have people recently like, Lydia, you're doing a lot of stocks. What's going on? And I was like, well, the blog is expanding. I have more authors. And he's great. So he has helped diversify the offerings here. So you can see we got the dollar cat on here. You guys know that's not me. We have Boeing on here. So I do try to do more stock commentary. I'm probably going to do I'd always do pound stuff, but what's interesting is when his name is Dio, when he does pound stuff and we can kind of banter about the pound. That's always fun because sometimes we just don't agree. He has a completely different trading style than I do, and his analysis is completely different. So that's why I love his additions.
It's great to show both sides of the coin.
Yeah,
man.
exactly. Yeah. I had someone say, "When did you start doing Bollinger Bands?" Like, that's not me. That's my other author. So it's nice that for him to come in and kind of diversify different looks of the market. And sometimes we do come to the same conclusions, which I think is awesome when he can look at Bollinger Bands and trend lines and see the same thing I'm seeing using Fibonacci levels and support and resistance. So So
Yeah, we believe in it here. I mean, it's great when
yeah,
there's
I know you guys
confluence.
epitomize it.
Yeah.
Yeah.
So you know what, Lydia? I hope for you and all your mentees and clients that this spring, the rains that come bring up a bloom of pips for everyone your words touch. And happy Easter to you, my trading warrior sister.
Oh, I receive it. Thank you so much, Dale. Happy Easter. And thank you so much for bringing me back on. I really appreciate you guys
You're a
bringing me
regular.
back and asking me back on. I appreciate the support and now even if it's just through following or just tuning in and listening. Thank you so much.
Lydia, you're so welcome. Thanks very much. We'll get you booked again. Ping me next week and we'll find another day. Okay, my
Okay,
friend?
sounds good.
Okay, everyone. So that's, what's today? Turnaround Tuesday. Okay, so I'm turning around and I'm turning off the platform. So thank you, Lydia, and thank you, FACE attendees. Remember, don't just count your pips, count your blessings. See everyone tomorrow and see everyone in chat. Blake's in there. Steve's in there, and God, I don't know, 100 other guys that are professional traders. Majority of them, this is not a hobby. See you later, everyone. See you tomorrow. Good hunting and adios. Thank you, Lydia.